Hi, everyone. Glad to be back with you. I'm Brian Manning. I'm a financial advisor here in Nashville, Tennessee for Pinnacle Financial Partners. And today we're going to spend a little bit of time talking through the CARES Act and its impact to individuals, specifically with respect to taxes. I've got a good friend of mine, Paul Anglin from Blankenship CPAs, joining me today. Paul has been a great business partner of mine over the years. He's spent time talking through several things and how they impact individuals and small businesses with respect to tax law changes. And he's going to join us today to talk about specifically how the CARES Act impacts individuals. So, Paul, thanks for taking some time with us today.
Hey, Brian. Glad to join you today.
So I think the first thing that we should cover as we talk about the CARES Act with respect to individuals is the stimulus checks. Everybody hopefully has received their stimulus check. Most people have been looking for those to show up over the last few weeks and months. So Paul, that's probably a great place for us to start. If you just talk for just a few minutes about how they came up with the number that you should have received and what the implications are for this year and moving forward with respect to the stimulus checks.
Sure. Appreciate it, Brian. Yeah, as you mentioned, the CARES Act, the biggest individual provision is the stimulus checks, which is really considered an overpayment of 2019 taxes made on your behalf that you would claim on your 2020 return. So that's kind of the mechanics of how that works. So as you said, hopefully most people will receive those by now. I would say probably 80% plus have already received those. I have understood there's some frustration out in the marketplace of trying to figure out status if you have not received those. So definitely have heard client comments, hey, I can't find that out on the site. So just be patient with the IRS, and hopefully that would come in pretty soon if that's the case. But as far as the stimulus payment itself for single individuals, if you were under $75,000 of adjusted gross income or married filing joint returns that were under $150,000, there was a $1,200 or $2,400 stimulus payment plus $500 for each eligible child. So a very nice benefit there. Those would be reduced to the extent you were over those thresholds. The reduction was 5% of every dollar above those. So for a single individual, it would have phased out at $98,000 and then at $196,000 for married filing joint returns. So if your adjusted gross income was over those thresholds, you would not be entitled to receive a stimulus check. The kind of nice thing about it is, though, that if a 19 return had not been filed, they based those stimulus checks based on 2018. So if you receive money that based on your 19 return you might not have been entitled to, there's no obligation to repay those stimulus funds. So when the 2020 returns are done next year, hopefully sooner than May and June, as a lot of our clients are extending to that July 15th deadline this year, hopefully the mechanics will go through. If you receive stimulus payment, it will come in as a credit and then immediately be reduced for the amount that you received. So likewise, if you were underfunded on your payment when you ran through the calculation based on your 19 return, that's where all that will come out in the wash, if you want to say that. So you'll either get additional refund payments based on your 2020 filing, or if you were overpaid, it just goes to zero and you can put your pencil down there.
Well, I think that's helpful. So there were some other pretty good information, pretty good tax benefits for individuals in the CARES Act. And I think one of the first things that jumped out to me, we've talked with a lot of people who have had hours reduced or even potentially lost their jobs as a result of the pandemic. And so it's certainly a financial crunch for them right now. And one of the benefits might be that they can tap into retirement accounts without a penalty right now. Could you talk a little bit about some of the impact to that to individuals?
Yeah, Brian, great provision in the CARES Act. A lot of people, may feel like they're retirement poor. They got a lot of money tied up in retirement plans, but accessing those funds is quite the cost of doing so. So to highlight kind of what you just mentioned there, if you're under 59 and a half and tap into retirement funds, it's a 10% penalty on top of the ordinary rates that would apply to those withdrawals. So in light of the epidemic, the CARES Act has waived the 10% penalty if you are a qualifying individual that has been afflicted with a coronavirus-related incident. So the Act allows individuals to withdraw up to $100,000 of retirement funds without the 10% penalty. And then you really have two options. This is kind of nice too. If you're thinking this is just a short-term need to get you through, if you wanted to repay that back to your basically to yourself and to your retirement funds, you have a 3-year time period to pay that back into yourself. Or if you decide, no, I just need the funds immediately and I have no intents of paying it back, you take it into income over 3 years. So at least the tax hit of the ordinary piece of that is spread over 3 years, which should help alleviate some of the immediate loss of those funds.
And Paul, is there a cap or a minimum or maximum dollar amount that applies to this for individuals?
It's the $100,000 is the cap. Yes.
Okay, so that's capped at $100,000. So anything above the $100,000, they can expect to receive the normal penalties involved with that. But the up to $100,000 is without the penalty, and then also have the opportunity to take that over 3 years in gross income, right?
That's correct.
Great. I think that's super helpful. So maybe on the other end of the spectrum, when it comes to RMD, required minimum distributions, there was also some provisions in the CARES Act that can impact individuals there. Do you mind talking a little bit about that?
Right. So the required minimum distributions were basically paused for 2020. Maybe some opportunities there. I know a lot of our clients normally take those distributions early in the year, but to the extent that you were able to, if you had received if you could return those payments within 60 days, that would have been an eligible activity under the Act to refund those funds back into your retirement plan. If you've gone beyond the 60 days, I'm not sure there's much you can do there. But if there were, I guess if you're taking installments of your required minimum deposits through the year, definitely put those on pause for the rest of the year. And anything you've received in the last 60 days, you should be able to return to your retirement plan custodian and not have to report that as income for the year. So a very nice provision.
I think that's great. That's very helpful. What about contributions, charitable contributions made by individuals for this year? How does the CARES Act impact them?
Yeah, great question. A couple of provisions actually around charitable contributions. The first is for those that do not itemize deductions on the Schedule A. There's going to be a special $300 above the line deduction for qualified charitable contributions. So I guess in this time of need, just as an encouragement to have, fellow Americans helping out our fellow Americans, a $300 deduction is a nice deduction. Again, if you weren't able to itemize otherwise. The other requirement around charitable contributions with the Tax Cut and Jobs Act, 60% of your income could be used as a qualifying charitable contribution. That 60% provision has been lifted to 100%. So theoretically, someone could give away 100% of their income for the year and have that all as a deduction. So a couple of nice provisions. It does have to be to qualified organizations, some of the normal requirements there, but definitely a lot of liberalization around those rules.
And certainly that would be a situation, if some individual were considering doing that, you certainly would want to have a sit-down conversation with your CPA to make sure that you're documenting things properly and that you've got the right game plan together. And that's our general advice anyway. There are so many different changes and so many things going on. It's very challenging for any one person to try to keep up with on their own. So we certainly advise you to sit down and have a great conversation with your CPA about your specific situation and how all of these different provisions impact you and your specific situation. Paul, what are some other provisions that are out there for individuals that may have gotten lost as all the news was circulating around the CARES Act?
Brian, to be honest, those were probably the most significant. The only other one that I'm really aware of is if employers wanted to pay student loans on behalf of their employees, that is now something that they can do that's excluded from the employee's gross income. Typically, that would be a source of income to an employee, just as compensation would be. But again, just a special rule here that allows for the employee themselves. It can't be for a spouse or a dependent, but for that employee to have those education costs reimbursed and not be income. Again, just with the hard times that are on us, I'm not sure of many of our clients that we've heard that have been too interested in this provision, but again, it's an encouragement to try to help out workers through these hard times. But yeah, I mean, kind of looking at the CARES Act in particular for individuals, the stimulus checks by far was the biggest provision, definitely followed up by the retirement planning of the withdrawals. So hopefully between the two, getting some cash in the pockets of the American people and then having some fund availability that may have been preventative otherwise, hopefully that'll help a lot of workers through these challenging times.
Yeah, well, I'm really super thankful for the time that you've offered us today. This is information that I think can be really helpful to individuals through a really challenging time. It's very challenging to kind of think about all the different things that are changing in our world right now, and there's a lot of information swirling. So we're thankful that experts like you, Paul, can take a few minutes and spend some time to help us understand exactly how it impacts us. I would encourage everyone to continue to tune into our YouTube channel, where we will post webinars just like this with information about all the changes that are going on and how they impact you as an individual or you and your small business. Also encourage you to check out our website, pnfp.com. Both the individual, the consumer section, as well as the small business section has lots of good materials and tools and information on there that can impact you. And then Paul's been very generous to share some of his information with us. I would direct you to Blankenship CPA's website, which is bcpas.com. They've got some very helpful tools and information available out there. Paul, thanks so much for your time today.
Appreciate it, Brian. Thank you.
Thanks so much.